everyone. I'm back with a new video and a new topic. Last session we discussed about the health insurance, and the topic for today is life insurance. This video is just to give an idea about the questions which you might have in your mind regarding the life insurance, which can be what exactly is life insurance, how does it work, at what age I might need it, or at what life stage should I have it, right? What things need to be kept in mind while choosing the life insurance? What is terms like term insurance, endowment, right? And what are their benefit plans? Now, obviously, here I'm not here to put forth any particular company or brand ahead of you for making any decisions, but to make a general suggestion and to give you an idea about how you can make a proper decision over the program. Right now, let's begin with the general topic, that is, what is life insurance? Now, if I speak plainly, it is one of those products which, before any other investment, you should absolutely buy. Why? Right? Because it is one of those products which is to secure people in your family in case of any mishaps. Right? First of all, as we are talking about what is life insurance and why is it necessary, life insurance basically works on the formula which is the most foundation idea of insurance, which is if something unfortunate happens, which in this case is the death of the person who's taking up the insurance, right? Then that person's family is provided with the financial protection. Now, in our lifetime, we take care of our family, of all the people close to us, but what about the time when we are not here, right? God forbid any of those things happen. We should always be prepared for something like that, right? So now I've given you a general idea of what is life insurance, right? And you might also have certain ideas about it, right? But now we need to know how it works. Okay, so in this part we see that usually in case of life insurance, at some appropriate age you buy the life insurance, and you buy it for a term or for a duration. Okay, now talking about the age at which it is said that it's the best time to buy life insurance is your 20s, and it should be bought till your retirement age. So if I take an example, if you are 25 years old and you retire at 65, then you can buy a 40-year life insurance plan, which will mean that you will pay a premium to the insurance company every year, which will be a fixed amount, right? And then at the end of the term, either you will get something in case you get a maturity benefit or endowment plan, or you will get anything in case, or you will not get anything in case of a term plan. We'll be discussing both of these, but in general, this is what happens, right? Now, I have used so many technical words as I was going through, but don't worry, I'll explain it one by one, okay? Since I talked about the term plan, talking about term plan, it may seem like a random product, but it is actually a very powerful product. It seems random because it says that when you buy life insurance, let's consider you buy it at the age of 25 and you buy it up to the age of 65, as we discussed, your retirement age, which means it's for 40 years term plan, correct? So every year you pay a premium to the insurance company to give you a cover for your health, right? Which means, God forbid, if something happens to you, then your family, whomever you decide as a nominee, it will be your spouse or your parents. They will get the amount that you have insured. But during these 40 years, if nothing happens to you, thank God, then you get nothing at the age of 65, when you have been paying a premium to the insurance company for 40 years. At the end of it, you will get no benefit if nothing happens. But then you might wonder, why are we exactly taking such a product, right? The reason why term insurance is a good product to consider is because since the insurance company doesn't have to pay you back, or they don't have to return your premium, or they don't have to generate a return, they offer the maximum cover for the lowest premium possible. This means that at a very nominal price, you can get the maximum insurance. Okay, now how much should you take? Usually we calculate it in such a way that supposingly I'm taking amount of S, which you earn annually. Okay, then the minimum coverage that is suggested is 10 times of S, your salary. Now that's the minimum amount. So that till 10 years, whatever your salary would calculate can go to your nominee. The range is taken from 10S to 20S. The benefit is that the amount or the premium that is fixed for the entire duration, you must have heard about inflation, and you must also know that due to inflation, the value of your money keeps reducing every year, which means that, let's say for this premium, let's say for a premium of 1 crore, if you pay 5 to 6,000 per year, then its value every year will keep reducing, which means after 40 years, when you would be paying 10,000 annually, frankly, that 10,000 will have no value. You will give it away like it's nothing. Yes, today it might seem as a big amount, but the best thing about insurance is that it's a fixed premium product. And that means you find it difficult right now, but in future, that difficulty will only reduce and not increase. This is a great benefit for buying a term insurance. Now, second benefit is that all the amount that you pay as a premium, it applies in your deductions under section 80C. Now, what is this section 80C? Section 80C is which deducts an amount from your total income, which is the premium amount you pay, and because of that, your taxable income reduces considerably. So the second benefit of buying the insurance is that you get the deductions, because of which you pay less tax. So the second benefit of buying insurance is that you get deductions, which is why you pay less tax. This is a way for the government to encourage people to buy the insurance. Now, the second term which I used was the endowment plan. Endowment plan, on the other hand, are the plans which say that you keep paying a premium for some term or duration, and then after that, you will get the return. That return could be giving back your premium, or may keep getting a monthly income for some years, or you keep getting a lump sum amount for some years or quarters, and so on and so forth. Okay. Now, there are other ways for this endowment plan to work, but the greatest or the biggest thing that you need to recognize is that you are basically putting a responsibility of insurance on the insurance company, that whatever premium you are paying them, they have to generate a return on it. So you are not buying an insurance product, but an investment product. And this is a popular recommendation, that this is not something that you should take at a face value. Okay, Obviously, you will be doing your own research as well, but to get at the exact details as per your requirements, as there are a lot of factors to keep in mind at personal level too, so you must also do your research as well. This is a suggestion which I'm making, as I said at the start of the video. And as we are talking, the most popular recommendation is that the premium you will pay them and the return that they will generate on it, you can do that yourself if you were to invest directly. But the biggest disadvantages of these endowment plans or these maturity benefit plans is that you have to pay for a higher premium for the same cover. Since there is no responsibility, so they were paying you the same cover for lower premium, right? And here, since they have all the responsibility to provide you the returns and everything, so they'll be taking up a higher premium for the same cover. So example, you were taking 1 crore for the 5 to 6,000. If you take the same cover of 1 crore in a benefit plan, then you may have to pay a premium of around 20 to 25,000. Now what here we are seeing is an increase of around 2 to 3 times, which may also turn into 4 times depending upon the brand that we are taking up. Now why would you want to do that? Only because you are getting a comfort of a return. But as I said, if you are a wise investor or a wise principled finance person, then you can generate that return from somewhere else as well. Now we have talked about what is life insurance, how it works, what's the right age to take it up, the term plan, the endowment plan. Now we have to discuss that while buying term insurance or the endowment plan, what are the considerations that you should keep in mind. Always remember that you are taking a life insurance product, which means you are insuring your life. So everything that you consider has to be as per that. Firstly, if the income is stopped due to your death, that is of course the obvious thing, but it is possible that your income stops because of 2 to 3 other reasons. Like, God forbid, it's a critical illness, okay, and because of that you cannot work, or there is a disability due to certain accidents because of which you cannot work. So you have to take these into considerations as well. These are called the add-ons. Okay, add-ons are the things which you can add on the core insurance product. The 2 most important things that I suggest you consider is, first, as I said, the critical illness add-on, which means if you get a critical illness during this term, then you are covered for that as well. And the second is the disability add-on, which means if you are disabled in any way and you cannot earn anymore because of that, then you will get a cover or benefit for that. Now, in addition to that, we can also consider 2 more add-ons. That if you get a critical illness, then after that you do not have to pay the premium. That is, there is a premium waiver on the critical illness. Insurance company, what they will do is they will recognize that premium on your behalf. So this is a good one, because due to critical illness you are unable to earn anymore, but premium needs to be paid. So if you take this add-on, then that premium is also waived off. Same goes for the disability. If you get a disability and you aren't able to earn because of it, then you will get a cover for sure, but along with it, the premium will also be waived off through this add-on. So these turn into 4 add-ons: critical illness, disability, premium waiver on critical illness, and premium waiver on the disability. Now, according to me, these 4 are important and mandatory add-on that you should consider while getting the life insurance in general. And talking about finally, which life insurance should you buy? Okay, so there are so many to choose from in the market. uh, some have factors so similar with the other companies that sometimes it's hard to decide, right? So there are two factors or considerations that you can keep in your mind. Number one is, of course, it should be a reputed brand. Why? It's a very simple explanation. First of all, because you are buying a life insurance, thus by design, by its nature, it's a long duration product. So naturally, you want to be comfortable with this company, this brand. Since it has to stay for that duration, so you obviously bet on brands which you trust immensely. Secondly, a very important consideration in life insurance is something called claims ratio. For example, if there are 100 claims made, first I'll explain the claims. See, the claims means that someone has died or they are claiming the cover amount that they have insured from the insurance company. So, what percentage of these claims are actually paid out? It's never 100% because people try to do fraud in many things, or it is established that the claim didn't happen because the insurance company didn't know something. Like, let's say someone already has some ailing, but they did not disclose it to the insurance company. Okay, and because of that, unfortunately, they died. So what will happen after that? When the claim happens, then the insurance company figures out that you did not disclose an existing illness. Then it is quite possible that they will not settle that claim, or your nominee will not receive your covered amount, right? These could be legitimate reasons, right? But it is important to know what is the claim ratio of that brand or company. The higher it is, the better we have the options that then allows you to have that comfort that if something happens, then my family will not have to run around to get this amount in their bank, right? Now, another thing is that whenever you take this life insurance, as I said, there are sometimes fraud or something, or people don't disclose. So what you should keep in mind, that you have to disclose everything, that you have to tell them 100% about all of your health issues. It is a life insurance and you do not want, like I just explained, that if something happens, then your family has to run from pillar to post to get this amount. This should be something that makes their lives easier, and it is only possible when you are clear and transparently disclosed everything, whether it's illness, whether it's the fact that you smoke or you have a certain lifestyle, and so on and so forth. Please avoid such mistakes, so that whenever it comes out in the open, it doesn't make things complicated, because the person who's taking up the insurance won't be here to like simplify things for their family. Finally, it is better to buy life insurance as soon as possible. As I said, the right age to buy your life insurance is within your 20s. If you take it too early, then maybe your income will not be that much that you can take a good cover. And if you take it too late, then premium would become higher, right? Because you have reached a certain age, and that naturally increases the chances of something mishappening, right? So according to most popular opinion, the right age, as I suggested, is between 25 to 35 years. If you buy life insurance between the age of 25 to 35, whether it's term or endowment plan as per your need, that will give you the best combination of a good cover, because your salary would be good enough to cover 20 times of it, and also the ride premium, because it won't be very expensive. I have tried to keep the video short and simple about the concept. I hope you were able to understand and your queries were answered. But as I said, if you have any questions or any queries which were left unanswered, you can simply write them down in the comment section below. And I missed out in the start, but if you like and any of these tips helped you in making a decision, you can share the video and help others as well. Have a good day and stay safe, stay insured.